All right. Good evening, everybody. Let's go ahead and get started. Want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know that it is indeed working. Hope everybody's had a fantastic evening so far. Looking forward to this webinar. I've been looking forward to this webinar for a while now. We've been waiting for this COT report to come back for a long time with the government being shut down. We have a little bit more clarity as to when the COT report's coming back, and even more clarity as to our next steps moving forward. And that's what this webinar is going to be all about, is getting us all on the same page, getting back to taking weekly trades again, using Steve's scanner to take those weekly trades, and using our dynamic sequencing logic, which is amazing. And that part we haven't really been able to employ very much with this being down. So there's a lot of really awesome things coming back, and it's going to mean that we're going to be able to start making money again with those weekly trades. And that's the bottom line. I know a lot of you guys have put weekly trades kind of on the sidelines because it's been, like the government's been shut down, so we haven't done anything. So couple of really cool things tonight. That's never going to apply to us again with how we're going to trade going forward. We're never going to get shut down because the government's down. We have a dynamic way to use the scanner. I've built an on-off switch with the COT report data so that we can still trade the data with the limited information we still have as far as fundamentals go and sentiment and so on. But the scanner won't be completely reliant on the government alone. It'll be more for confirmation purposes going forward. And I think it's the right decision. It's a little bit of a hard decision because we want the COT data is something I've been using for 10 years. And we definitely still want to use it. There's no doubt we're definitely going to keep going with the COT report data. We just don't ever want to get shut down again, right? So anyway, a lot of good things coming that way. And I think we've learned our lesson and we're adapting, which is really great. But like I said, I just want to welcome each one of you here. Appreciate you guys showing up. A lot of you are this is your second hour with me on a Thursday. I know it's a busy time of year, but this is a great time. The markets usually move a lot during the end of November and first part of December. So I'm hoping to be able to make some good money here before the end of the year with our weekly trade accounts. And I'm going to show you how to do that tonight. But like I said, I just want to welcome you guys here. Also want to give a shout out to those of you who are watching on YouTube. I want to say hello to you guys and welcome you to participate in any way that you can. And also want to say hello to those watching this on the recording through the website. This is probably a webinar I'm going to use. I'm probably going to clip this webinar to use as a training on the Steve Scanner page going forward. And so I just want to make sure, say hello to you guys as well. Okay, very good. Let's go ahead and jump into this. Before we get started, as always, you just have to go over a disclaimer. Need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. First of all, let's actually start with the CFTC COT data. So one disappointing piece of information this week is this new bulletin right here. The government has released their release schedule for when we anticipate to get caught up. So a couple of things going on. So the government shut down on October 1st, as you guys know. They reopened on November 12th. And so the CFTC got back into the office this week. And then just 2 nights ago, they released this release schedule table. And they have a couple of things going on here. They need to get caught up because there's like 8 COT reports that we're behind on. The COT report is released once a week on Fridays. And we have, the government was shut down for 7.5 weeks. And so we're 8 reports behind. And tomorrow we're owed another one, right? And the time just keeps going on, right? And so we're a little bit behind that way. And for those that don't know, like I said, the COT report is released once a week, and it basically tells us what the banks have been buying and selling on a week-to-week basis in the futures market. And we use that futures data to help us determine what Forex pairs we want to trade and which direction we should go. So obviously it's a very valuable piece of information because it can help a swing trader identify really, really good trades to take. And we look at that data from like 7 or 8 different angles. And so we definitely want to get a hold of that data again. But this is the release schedule. And so, they released one of the COT reports from October 3rd yesterday. We're going to get another one for the 10th of October tomorrow. My plan, by the way, just so you know, is to update the scanner with those 2 reports this weekend. So every weekend, I'm just going to, like I normally do, I'm just going to take the new two reports that they give us. And as time goes on, we're going to get more up to date results with Steve's scanner as far as the COT data goes. And so we anticipate that the scanner will be completely updated, definitely by, let's see, the new published date. Yeah. So right here, January 23rd, 2026. So not till January to be completely updated. Now, that doesn't mean we can't use the scanner. This is the sad news. We have some really, really good news and some good things some updates I'm telling you guys about that's going to be really, really awesome. But just know that the scanner will be updating with new data, two reports a week on the weekends, and you will see the COT signals change on Steve's scanner slightly, although a lot of those signals may still be a little bit outdated. It doesn't mean you can't necessarily use it. There's certain aspects of how we look at the data that will be functional right away. For example, the divergence portion of Steve's scanner and the divergence scanner under the members section, that area probably will be very functional like this weekend, because it doesn't take very new COT data for the divergence scanner to be somewhat accurate. In fact, you could probably go out like a month, maybe even a little bit more than a month, and you'd still have pretty good data as far as the divergence scanner goes. So that's going to be great. Although the 3-week and 5-week shifts that we look at, those probably won't be very useful until we get all the way until January. Anyway, we'll discuss that part going forward. Okay, so that's the sad news, although not too sad, because we do have at least an idea of when we're going to get that data back. Here's the really good news. So as you guys know, we built this macro and fundamental scanner several weeks ago. I'm not exactly sure what the inspiration was to make this, although I think I had just extra time on my hands back during the government shutdown. And I had some time to contemplate. And I think one of the things that really hit me as I was thinking about, getting back into the weekly trades is the whole point of Steve's scanner is to trade like the banks, right? And I thought about it. I was like, well, what do the banks really care about when they're making a decision on what Forex pairs to buy or what future positions to put in the futures market? Because a lot of them, I know they have some high frequency trading that the banks do, but when we talk about what the banks really buy and sell, like their big holdings, I'm not talking about their high frequency stuff, which is a whole different department. I'm talking about like what the banks acquire over time and the positions that they take, the ones that are similar to the COT data, those types of positions. It's all about macroeconomic variables. So when a bank makes decisions, they make decisions based off of the GDP of one economy versus another economy. They make decisions based off the inflation data from one country to another country, the unemployment and the interest rates and so on from one to another. And that's important because if one country is having inflation issues more than another, that's going to create some kind of opportunity for us to trade. If another country is doing really, really well with their unemployment, but another country is not doing as well, there's a trade opportunity there. Same thing with interest rates. Those are called carry trades when you have one interest rate that's high in one country and another interest rate that's really, really low. You can create what's called a carry trade opportunity. And so this is how a lot of the times when banks choose what positions to take, they base it off of these macroeconomic variables. And I know there's other macro variables like the business climate, there's consumer sentiment reports and things like that that are also included on traditional traditional news calendar websites like Forex Factory and so on. But we don't necessarily look at those. I'm trying to focus on these 4 main news events that affect the markets. And the other thing too is this scanner, the macro scanner, is a weighted composite scanner as well. So it looks at things like the recency when a news event has come out. It also looks at things like the difference between the interest rate from one country to another. If that difference is really, really big, it's going to create a bigger score, which ultimately will create a much bigger signal, which what that means for you and me is that it's going to take precedence when we take trades. All of this to say that the scanner is very, very smart. And and then another thing that's very cool too is that the scanner updates on its own. This is a living, breathing machine. It doesn't need uh, help on my end. It will just update in real time. It collects these data points from several different places, including Fred, and it also collects this data from um, the World Economic Forum and the World Bank. So there's three different places where it's getting this information from, and it updates in real time, which is super, super awesome. Okay, so this was the whole point when I put this together is I wanted to have something that was exclusive from the United States government in case they do this again, which by the way, there are rumors that they may shut down again if they can't come to another deal in January. If I recall, I think the funding bill that they put together was only valid to open the government for another 2 or 3 months. And then they have to come up with another bill to reopen again and to continue funding. So if nothing happens, then we could be looking at another government shutdown. I don't think so, but I always could be wrong. And I don't want to take the chance. So we want to have a way to continue to be able to take weekly trades. So I've made some updates to Steve Scanner. You may have seen it already, but this is the new updated Steve Scanner. Really robust. There's a lot of checks and balances. A lot of the same stuff that was built into here before are still here. But what's different is you'll notice when you look at Steve Scanner today, it also has it has the normal all 28 forex pairs plus the 5 CFDs down here. You'll notice though the 5 CFDs don't carry fundamental data. We don't collect fundamental data on gold and silver because it's not its own country, it's not its own currency, so we can't collect, GDP or unemployment information on gold because gold is gold and it's not a country, right? So we can't collect that. So you'll notice that those are blank in those areas, but the rest of it we can still collect via the COT reports over here. So the scanner includes a lot of different things. You don't necessarily need to know what each thing is, although for those of you that are very interested in like all the details that move the market, it's available. If you're just looking for like, okay, Steve, how do I make money with this? It's as simple as this. It's just like it was before. It'll just show you the overall signal of the week right here in this second column, just like it always has. And these signals are the best signals that you could possibly take in that particular week. So it's going to say strong sell on the NZD CAD, strong sell on the New Zealand dollar, strong buy on the CAD franc, and so on. Like these are going to be your best trades that you'll be taking. Right now, these first like 6 columns, let's see. Well, I guess like this is the overall signal, and then you got fundamental right here that starts in column 3 and it goes all the way till column 3, 4, 5, 6, 7, 8. So the columns 3 through 8 are all about fundamental data, and everything from columns 9 to 10, 11, 12, 13 are all about COT report data. Now, right now, since the COT report data is still a little bit old, it is updating actively. And over the weekend, this will always update with new COT data. Going forward, the scanner is not going to weigh that COT data very significantly. In fact, for the first couple of weeks, I don't plan to weigh the COT data at all, just because it's still kind of old. So right now, the scanner is going to create signals based off of the fundamental data to begin with. And then in the future, it will also, as more COT data comes in and we get actualized data that way, it will also factor in the COT data as well as the fundamental data and ultimately create a score that will then distribute an overall signal for you to take. And these are going to be very high quality trading signals that have built in, like I said, checks and balances to make sure that we get the most accurate signals each week right here. So I feel really good about this. I've also been testing the macro scanner for the last couple of weeks. I've been very happy with the results. It's not going to make money every single week, no different from the way we've been trading the Steve scanner. Not every week you're going to make money, but that's okay because of the way we manage risk, which we're going to get to in just a moment. So game plan. Starting this Sunday, we're taking weekly trades again. Heck yes, it's going to be super awesome. We're going to focus on, right now, my plan is just to take the top 8 trades from the scanner, and I'll tell you what those are. So I'll post a signal and just show you the top. Right now there's only 1, 2, 3, 4, 5, 6. So, and then maybe we'd add two more if we wanted to. But my plan is just to take the top 8 trades that are available on here. If there happen to be like 12 signals, I still think I'm going to cap it at the top 8. I don't think there's any reason to take more than that. Plus, with the way we manage risk, that could be just kind of confusing to have more trades than 8. Um, but I would suggest that you still take all 8 trades that we post here. But this is all you have to do is just find the top overall signals. I would only focus on the ones that say strong buy and strong sell. Obviously, the stuff that says neutral, I would just stay off those ones because we don't really have a fundamental or caught report bias on those. And then even the ones that say buy or sell, even though those are slight buy or sells, I probably wouldn't mess with those. My main focus is going to be on the strong buys and strong sells, just like we normally do with Steve Scanner. Nothing's changed that way. Let me go ahead and answer some questions because the next part I'm going to take some trades and I'm going to show you guys how to do this. Let's see. Clark says earlier, as the scanner updates throughout the week, after you have placed your weekly trades on Sunday night or Monday morning, do you ever add a trade, for example, on a Wednesday with a new pair now listed on the scanner, strong buy or sell, or once trades placed, leave as is? Okay, that's a great question. Yeah, we've had this question before, and it's a great question to ask. So I personally don't do that just to keep the strategy super simple. And we want to keep this, like, how do I put it? Like, as a complex and like, as you guys know, like, I'm really excited to show my work. I feel like the scanner is very clever, but at the end of the day, I realize that no one really cares unless it makes some money. Right. And so cool. Like, that's why we do these webinars, so we can talk about the cleverness and we can talk about how to make it better. But at the end of the day, we want to keep the strategy super simple. And so to keep the strategy simple, it's just about taking this top strong buys and strong sells at the beginning of the week and holding them till Friday. So even if the scanner may update with new fundamental data, let's say on a Wednesday, we'll just wait until the next Sunday to take that trade. There's no need to jump in there to take another trade unless you wanted to take like some kind of price action trade that's totally separate from this system and a totally different account. You can do that. But as far as this strategy goes and taking weekly trades, I'm not ever going to go in there and like add another trade just because it pops up on a Tuesday, Wednesday, or Thursday or something. We'll just wait until next week. So we want to keep the strategy super simple that way, right? Let's see. So great question. Thanks for asking that, Clark. Jill says, are you going to send these out in Telegram on Saturday and Sunday night like you did with the caught signals? Yep, exactly. Nothing's going to change that way. We're going to get right back to that. And so it'll look very similar, if not exactly the same as before, where it's just going to be me posting. Let me see if I can actually find a post from the past. And we're going to have to go back quite a ways. Let's see. I'll find it. Here we go. Okay. It looks like this, guys. So it comes with the picture of all the trades we're taking. I'm usually going to try to box up the signals so you know which ones to take. And then it's also going to come with how to manage risk. There's probably going to be a video included right here on what trades to take and some other instructions. So it'll be a similar post to something like that going forward. So, okay. Nice. It's making you money. Oh, Roger, I'm love to hear that. Yeah, I saw this was a good week with the macro signals. I took a bunch of trades with macro signals, had a really good week. And obviously the macro scanner specifically we're giving out for free for now. And it's obviously been I've had a lot of people who are not in the group reach out saying, hey, thanks. So I'm happy to. I think it's a fun thing to provide to just traders in general. But I think Steve Scanner is going to be the much more robust scanner going forward because it's going to have fundamental plus caught data. And I just can't think of anything better than that. Like it's like the ultimate swing trading scanner of all time. So I'm excited for that so excited for the caught data to finally fully get back in. Let's see. Lee says with 3 trades per the top 8 signals, it's actually 24 trades for the week. Correct. Yeah, we're going to get to that in just a moment. It's technically 8 market orders and then 16 pending orders. And I'm going to show you how to do that in just a moment. Yep, totally. Daniel says freaking government making us scroll forever to find the latest weekly trades. Yes, yes, totally. Yeah, it's crazy how long ago that was. Try refreshing, Jim. If your browser was still open, because I made an update to the scanner this afternoon. So if you refresh your browser, the scanner will probably update to look something very similar to mine. If you try it again. So okay, yeah, and we can talk later if it's still not working. Yeah. Okay, sounds good. All right, let me show you how to do this, guys. So here's how you take these trades because we gotta move along. So let's go through the demo together and walk through this process. So at the beginning of the week, you have 2 options. You can take these trades. You can take them Sunday night. That's when I do them. You can also take these trades Monday morning, just when the market opens. I usually would suggest that you wait until at least the Tokyo market opens. The first 2 hours when Sydney opens at 6 a.m. or 6 p.m. Eastern on Sunday. Usually those first 2 hours are not great for spreads and stuff like that. The spreads get a lot better once Tokyo opens. And that's at 8 p.m. Eastern time on Sunday. So anytime after 8 p.m. Eastern on Sunday, I would suggest that that's a great time to start taking your weekly trades. You're probably going to want to set aside something between 15 minutes and up to maybe 45 minutes to get these in because there are several trades to get in and you want to double check your work and make sure that your risk management's where it needs to be for the week and all that kind of good stuff because it is going to be a week long trade and you want to make sure that everything's where it needs to be for it to succeed. Okay. But once they're in, you're done for the week. All you have to do is just close the trades on Friday and then you're good to go. Okay. Okay. Very good. And then let's see, I had another thing. I'm sure I'll say it again. I'm sure I'll have some other things to say, but let's get right into it. So yeah, and for those of you that live in Australia, I know we got a few of you from land down under. So thanks for coming tonight. I guess it's your morning right now, but yeah, for you guys, this is going to be your Monday morning. And you technically could take this Monday morning, even in the United States, if you wanted to. I would just suggest that if you're going to take it on a Monday morning in the United States, if it's your preference to get it in before the New York market opens. So you may want to get up early on a Monday if you don't want to take it on a Sunday night. I totally understand that. That's fine. Okay, very good. So let's go ahead and take this trade. So here's how we get started. By the way, I made an update to this. This is the non-lot size calculator method to manage risk for the weekly trades. I'm going to put a button to this link. I plan to do it tonight. I was going to do it earlier today, but I was busy working on the scanner. So there's going to be a button probably, I think, in between the lot size calculator and this information right here to the non-lot size calculator journal for the weekly trades. So I've updated this. So this now includes your lot size recommendation, and it also includes unit recommendations. So if you use units instead of lot sizing, it's provided to you right here. If you use a lot size with your brokerage or whatever trading platform you're on, it provides that as well. Okay. So let's say you're trading on a 100K account. The way we manage risk is we start with the default multiplier, which I've adjusted this for a few different purposes, but I'm going to start with, I think for most people's platforms, a 0.25 contract would be perfect for a 100K account, which is 25,000 units. Okay. So if you use units, makes it easy. If you use lot size, it's easy. If you have a losing week with the weekly trades on Friday, and you look at your account and you're like, oh, dang, I had a losing week. No problem. We're going to fix that the next week or the week after. So you'll move up to the next step. You'll move up to 0.37 risk per, or not risk per trade. It's lot size per trade. And then it's 37,000 units if you use units instead. Okay. So this is really nice because now there's no guesswork on how much should I use for my lot size? Like none of that. You don't need to worry. Just know what you got to just know what week you're on if you're on week one, which we're all going to start on week one, starting on Sunday night, then you'll just find whichever account size is yours. If you trade with 50K, you'll go start right here. If you start with 100K, you'll go right here. If you trade with a 200K account, you'll start right here. Easy, right? Makes it super nice. By the way, here's the link. So you're going to want to save this, or if you don't save it, that's okay, because I'm going to put a button on here that takes you to it just right on the lot size calculator page. So that's going to be really nice. So if you're ever like, oh, I don't know where I'm supposed to go, it'll just be right here going forward. Okay, very good. Let's do this now. Okay, so we got to take these trades. Let's go back to right over here. Let's go to Steve's scanner.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so there's two ways to do this, right? You're usually going to get a signal provided by me, like on Telegram, and you can just take the stuff that's on Telegram. By the way, when in doubt, just go off of what's posted in Telegram, because I know the scanner has the ability to update as data comes in. So if you're ever like, hey, Steve, like I noticed this one signal might be a little different from how it was, a couple days ago or whatever, just Telegram, okay? Because I'm going to post it, and that's what we're going to use to post results, and that's the account that I'm going to be using. And so, just when in doubt, just go off the picture that I post in Telegram. So that might be the preferred way, but you could just come right here on the you could come straight here and find it as well. It's fine. And you'll just start with the first signal right here. It says Aussie dollar strong sell. Right. So you'd come in here and be like, okay, I'm going to sell the Aussie dollar and let's get started. So we go over to our account, we find the Aussie dollar, and it's a strong sell for the week. So we'd click the sell button. And the first trade's just at market. So you just take an at market order. And then the units, what do you put in here? Well, that's easy because it's just provided to us right here on the non-lot size calculator page. And since this is a 100K account, I'm going to start with week one, which is 0.25 lots or 25,000 units. Okay, perfect. So I'll just put in 25,000 units as my trade. Then I don't need to take profit. That's how simple the strategy is. You don't even need to use one. In fact, please don't use a take profit. Okay, this is good. It's going to make you and me different from all the other folks out there that use take profit. I'm not saying take profits are the end of the world. In fact, it would be the end of the world if you didn't use a stop loss. That's obviously required. But the way we operate is we're all about three things. What are the three things to succeed according to Tom Hogard? Always use a stop loss, always add to winning trades, hold on to winners longer than losers. Okay. So when you don't use a take profit, you're actively choosing to hold on to winners longer than your losers. Okay. And when you use a stop loss, you're saying, hey, market, I'm going to cap how far this can get bad. It will take money out of your account, but it's on purpose and it's okay. So I know not every week it's going to pay to hold on to a winning trade all the way to the end, but there are going to be a couple of weeks in a month or throughout a 2 month period where if you just leave the winning trade to just run, it's going to pay you in just such massive ways. And if you haven't experienced it yet, trust me on this. Please hold on to your winners until the end of the week, until you get a massive week and you'll be converted. Like you'll be straight converted. All right. But you have to experience it first. So until you experience it, just trust me on it and you'll see. Okay. All right. So no take profit. What we do have to do is put in a stop loss. That is absolutely required. So we're going to put in our stop loss. How do you do this? Super easy, guys. You just go to the scanner or the picture that I post on Telegram, and it's just the ADR. So it's just the ADR in pips. So average daily range, 61 pips is the average daily range for the Aussie dollar. So you're just going to put in 61 pips, 61, and the trade is ready to go. Like we're ready already for this trade. And you don't need to worry about like the lot size calculator and stuff like that, because these are already suggested lot sizing for each account that you possibly could be trading in. If your account size is not on here, let me know and we can work out something. Although feel free, if you're like, let's say your account is like $97,000 and you're like, well, that's in between 95K and 100K. If you're feeling risk on, round it up to 100K. If you're feeling risk off, just round it down to 95K. So that's problem solved that way, right? Okay. So just let me know. How about $800? So you're going to have to, by the way, use units, because you can't really use a lot size. As you can see here, there's no lot size that accommodates an account that small. So I would just go with the units that are provided right here. If your account is, $1,000 or less. If it's really a lot lower, let me know. We can figure that out. Okay. Next step. Let's go ahead and take the trade. So the trade's ready. Let's go ahead and take it. So you hit sell, and then this would be your first trade. Now you got several trades you got to take. You got 3 on each pair. So there's, like Lee said earlier, there's 24 trades you got to take total. It can take you 45 minutes. Now we're going slow because we're talking about everything. We're going to move a little faster here once I finish this trade. Okay. So the next step, okay, we got a good stop loss in that accommodates the whole week. We got good lot sizing in for this account size, good signal from the fundamental data. We're looking good, but we got to do one more thing. And this is key. What do we have to do? Add to winning trades. This is the thing. Again, we're trying to do as many things as possible to separate us from the herd. Most people don't add to their winners, and it's a huge epidemic, right? And you read Tom Hogard and he talks about this, right? And like Roger was saying, we have to add to winners. And until you experience it, just trust me on it. I know it might feel counterintuitive to add to a winner because there's always that feeling of wanting to take profits. But once you hit a winning week where everything just runs in your favor, I mean, again, you're going to be converted faster than you realize. Like it's going to be like, whoa, I can't believe I wasn't doing this before. But just hang on, because it won't happen every week. But that 1 or 2 weeks a month where everything runs in your favor, it's going to pay you in such massive, colossal ways. Okay. So what we got to do is we need to take 2 more trades on this pair, and we're separating the staggered positions by a half an average daily range. What's the average daily range? Again, back on the scanner, 61 pips. About half would be 30, 31. I don't care if you don't need to go exact, guys. Like Marty would say, I don't think he's here, but close enough for government work is what he always says, right? So we're gonna do half an average daily range. So I'm just gonna measure from the current trade 30 pips, which is basically a half an average daily range. I'm gonna drop it right there, and I'm gonna mark a horizontal line, half an average daily range there. And I like to do the next one. I'll go down another 30 pips from there and put another line right there. The reason why I'm putting a line there, guys, is so that I have labels so that I know where to put my next trade. The reason for this is because we want these trades to run automatically throughout the rest of the week. Okay. So if this thing just runs hardcore in your favor, we want to make sure that we add to that position. We want to amplify profits. We want to boost them. We want them to just dump money in our bank accounts. And the way that's going to happen is if you add to winners. Okay. So now what we're going to do is we're going to click sell, and it hasn't taken a trade yet, but we have to flip this to a stop order. So this trade will only trigger if the market goes in our favor. Now we're going to switch this price to this next level, which is 0.64231. Okay. Should I do it? Yeah, I'm going to do it. Okay. So this is confusing, but I try to make it as easy as possible. When I'm trading with US based brokerages, so if you don't trade with a US based brokerage, or if you only trade prop from accounts, this doesn't apply to you. So if you trade your own capital and like forex.com or Owanda, this applies to you. You have to change this unit by one. So I do 25,001. You're not allowed to have a duplicate trade with the exact same lot size in the United States due to the Dodd-Frank Act. So, and you can't use the same stop loss either. So you have to change that by one to make that work. So you just go, I just change it by one. And then I'm good to go. Okay. Now, again, if you just have a prop from account, just leave it at 25,000. Or if maybe you live in Australia or across the pond in the UK, or you live in Africa somewhere or India, and you're watching this and you want to and you don't have that law, then you can just keep it at 25,000. Okay. So just a little thing right there to bypass that rule to make sure that you're compliant. All right. Stop loss again, skip take profit, go straight to stop loss, 61 pips. You're ready to go. Hit sell. Boom. That trades in. So quick. Right. Now let's do the last trade. Okay. We'll go ahead and click sell again. We'll change this to stop. We're going to put in the next price. We've got it labeled right there. It's 0.63933. Change the unit by one. I'm just going to do 25,002. You could do 24,999 or 998. It just takes longer to fill that out. So I just do 25,002. Okay. Skip the take profit, go straight to the stop loss, 61 pips, boom, hit sells, boom. This trade is ready to go for the whole week. So here's the deal, guys. If this trade is very successful, here's what it's going to look like. It's Sunday night. The market can go wherever it wants to go. But by Friday, if it ultimately winds up down here, you're going to make a truckload of money. And it's a lot of fun when that happens. Okay. Now, what could also happen, because trading's not that easy, right? Like there's losses involved, right? So in a perfect losing week, because I mean, there is such a thing as a perfect losing week, right? Right. We don't want to lose, but like in a perfect losing week, the market will just not trigger these other two trades and it will just go against you like this. And we'll hit your stop loss and it's not fun and you'll lose money and game over. And usually if that's going to happen, it'll happen like Monday or Tuesday, like right away. And you'll pretty much know by Tuesday or Wednesday if you're going to have a winning week or a losing week. But the nice thing about this loss, though, hear me out on this, is it's not going to take a ton of money out of your account for two reasons. One, you only got triggered into one trade. So the exposure is pretty low. Two, you're also on your lowest level of the multiplier, right? That's this thing back over here. So you're not risking a lot of money because you're just on week one. And since we're adding to winning trades and we're not adding to losing trades, that's the worst thing that can happen. Now, I know these signals are really, really good. And most weeks, this is going to make money. And I know sometimes, like there's been like last week, there was a couple of trades that went against us. And if you had just stayed in those trades into this week, you actually would have made money. So I know there's always those nuances where it's like, oh, if we had just stayed in, we could have made more money. we don't want to play that game, guys. We just don't want to play that game. We just want to hit it on the weeks that it works. And if it works great, it'll work great. If it doesn't, it doesn't. There will be some times too where this will trigger into a trade or two. Let's say it goes to the second layer right here, and then the market then turns around. It stinks when this happens, but it can happen. It can go and grab your trade and then go against you. I know that's a possibility, but guys, it's okay. There's provision for that. There's room for that. Allow it to happen. But when you have a big winning week, you'll see how quick those losses evaporate. It will be fast. It'll be over and done with before you know it. So, okay, we're going to do another example. But before I do the another example, I just want to read your guys' comments. Jim says, can you show me where the stop loss is for the stacked trades? Yeah, absolutely. So it actually shows up right here in the yellow. This stop loss right here is the stop loss for the market order. This stop loss right here is the stop loss for the secondary trade that could potentially trigger. And then this stop loss right here is basically at the entry price for the third trade. And that makes sense because now we're an average daily range away from triggering into this final position right here. Okay. By the way, this makes it simple when you're stacking to use just an average daily, half an average daily range to stack, because what's nice about using the average daily range is because it's fine tuned to the currency pair that you're trading. There's not like some arbitrary, like, oh, let's do 20 pip stacked. Like, no, we're tuning it up to the currency pair that we're trading on purpose. Anyway, there's a lot of detail and cleverness that goes into it, but we don't need to talk about that cleverness tonight. We'll do that in other webinars. I just want to make sure that you guys know how to do this so that you can effectively make money with this. You don't need to know all the science that goes into why this works and so on. I just want to make sure that you're just crystal clear on how to trade this so that you're locked and loaded and ready to make money. Okay. Oh, you get it now, Jim? Okay, very good. And then Roger says Christopher Dodd and Barney Frank were both culpable in the disasters that prompted their stupid act. Yes. Yes. Nice. Lee says, I have an Excel file that calculates my levels for you. That's awesome. Your OCD thinks drawing lines is too inaccurate. Yes. Yeah. For me, I could see that, for me, it works to just draw the lines. But yeah, it's nice if you've got something to draw those levels. That's good. Let's see. Earlier, Craig said, well, I skipped it. Why isn't it a fixed percentage per trade, as you may have two losers and one is a lot bigger than the other one? Okay, so very good. This is a great question. So we used to do it that way, actually. So we used to use a lot size calculator instead. Here is the purpose behind using this instead of a lot size calculator. So I know this may be like, why do we have to use this? And some of you are like, oh, I love that we get to use this, right? But here's the reason for using this. The purpose behind this is to keep every single person in the group making the same percentage each month. When I make 5% on my account or 10% on my account, you're also making the equivalent of 10% in your account. There's not this like, well, Steve made 10% and I only made 3. Like none of that's going to happen again. Like this is going to keep everybody on the same page as far as lot sizing goes. And then the other purpose behind using this is it's going to be so this is designed to maximize leverage, assuming 1 to 30. And the reason why I chose 1 to 30 is because the average person has about 1 to 30. Like some prop firms are 1 to 20, 1 to 30. Some prop firms have 1 to 50 leverage. I know that in the United States, that's the cap. But if you look at the margin sheet for like a Wanda and Forex.com, some of the leverage is like 1 to 30 on some pairs, like pound yen is 1 to 20. So even though the law is 1 to 50, they cap the pound yen at 1 to 20 just because it's a broker procedure and policy. So anyway, I just wanted to do something that was about the average. And so this is designed to maximize leverage by week 5, assuming an account that has a 1 to 30 cap. Anyway, not that you need to know that. It's just I'm trying to keep everybody making as much money as possible on a most average account, if that makes sense. So that's the purpose behind using that. If you have other questions, let me know. Okay, so we got to do one more example, unless you guys want to do another one beyond that. But let's just do one more. Let's do a buy trade this time. So let's go back to the scanner and let's find one that's a buy. Let's do, I don't know, like Euro Kiwi. That's one that's really good this week. As you guys know, it's a strong buy. Um, yeah, let's do that one. Plus, that one has a bigger ADR. I think that'll be a really good example. So let's find the Euro Kiwi. Here it is. As you guys know, it's been a great week for this one. Last couple of weeks even have been pretty good. So we go ahead and click the buy button. And immediately you're going to be prompted to put in the lot size. Okay, what's the lot size? You go back to if we're on week one, we would just do on a 100K account, 25,000 units. If we were on week two, we would go to 37,000 units per trade. Okay. If you're on a 25K prop account, you would do 6,000 right there. You just find wherever your account size is and you just go with that. Okay. All right. So we'll do, where did I put it? 25,000. Okay. So we'll go back here, type in 25,000. No take profit. Stop loss is 128, I believe. Yep. 128, as you can see right there. 128. And you can even, like, by the way, here's a little trick. You can extend this out. Like, you can extend the overall signal out if you need to. Actually, it doesn't look like you can move. Dang it. I thought you could. I was going to say you could bring the ADR closer if you can't find it. But another trick is just to highlight the row, and that'll make it easy. So you don't mix and match ADRs. You can be like, okay, the ADR's at the end there. Okay, 128. So you go over here, 128, then you click buy, and that trade is ready to go, but we need to finish the other pending orders, right? So half of 128, if I'm doing my math correctly, is 64. Okay. If you need a calculator, you can pull that out, but I just did it in my head. So 64. So you go up 64 pips from this current price. And that's going to be the distance between the next trade. So 64 right there. And I'm going to mark it with a horizontal line. And then I'm going to go up another 64 pips from here. Again, doesn't need to be exact. Pip or two off is not going to kill anybody, guys. Totally fine. But yeah, if you're OCD, then I guess there's ways you can make it exact. But yeah, it's not going to kill anybody. So, all right. So then you go ahead and click buy again. Then we change this to stop. We put in the price, and that's just this next level. So 2.06885. I changed the unit since I trade in the United States. I'm going to change this by 1, and then stop loss is 128 as well. Nothing changed there. Just click buy. Okay. And then we got to do the last trade. Click buy again, change it to stop, put in the new price, which is 2.07538. Change the units by 1. Skip the take profit, go straight to the stop loss. It remembers from the previous trade, 128. We click buy, and boom, we're done. So we're done with that last and final. Like this is good to go. So you can see, like, once you get in the rhythm, you could get this done in like 10 to 15 minutes. Now, and maybe that might sound crazy for some of you, but eventually you'll get in the rhythm of doing this over and over again at the beginning of the week, that you'll be able to accomplish this in as little as like some of you might be able to do this in as quick as 15 minutes. But if you need 45 minutes or an hour, to me, that's not a huge cost to pay. Like, if you have to do this for an hour on a Sunday night to literally make a full-time trading income, and you will with these trades. In fact, we didn't show you this, but this is the results with Steve Scanner over time. So you guys can see this has made a 38% return. I know that's prior to the government shutdown, but that's the year-to-date results. And that only includes February, because we didn't have this account in January. I was trading with a different account. So this is just January to October basically. This is like 9 months or 10 months. Yeah, not even 10 months. This is 9 months of trading, and it's a 38% return. We didn't even get to trade October and most of November with this account, and I'm sure it would have gone positive too. But yeah, this is what you should expect right here. You'll actually notice the account, like in August, it had 2 losing weeks where we went from 31% positive all the way down to 28.72. So it basically had a 2.5% drawdown. And then on September 10th, and that week of September 10th and 11th, that ended up just shooting to the upside over the next 2 weeks. And it just had good week after good week at the end of September before the government shutdown. And we ended up making from a low of 28.72 to a high of 40.53. So it's like an 11 or 12% gain in 2 weeks. So that's why I say the drawdowns are tiny because you're not adding to losers, and the profits are huge because you're adding to winners, and you're also using that lot size calculator here, or this matrix, to make sure that you're positioning just correctly, which is awesome. Okay. Other thing, I have actually one other thing I want to tell you guys at the end here. It's going to be really cool, but I got to answer these questions. But like I said, this won't take you more than, I mean, max an hour. If it's taking you more than an hour, let me know and I can see if I can help you kind of speed up that process. But there's also nothing wrong with taking an hour, is what I'm trying to say. Like, if you want to be slow and you want to make sure that you get your numbers right, totally fine. Because once these are in, you're good for the whole week. Craig says, I had both stops trigger this week, one on one pair, then turned around, and all three positions closed out at only at one stop loss. Does it cancel the stop losses for the stop loss orders once they get triggered? Um, so you had 225,000 units close at one stop loss price instead of 75,000. Okay. So Craig, if that's happening, it's probably because the units are different or the same. Like, if you don't, you know how I changed each contract size to have one lot size different? These are treated as separate trades as long as the lot size is different. If you have the exact same lot size on each trade, it will combine them all as one stop loss and one entry. It'll average those entries together. And unfortunately, what you're describing will happen if you don't do that. Where what will end up happening is you'll just, all your stop losses will kind of come up closer, and you have a higher likelihood of hitting those stop losses, if that makes sense. So anyway, that's the reason for slightly changing the lot size on each trade. Zane says, hey, Steve, apologies if you already covered this, but the stop loss is just the ADR. Is that right? Yep, exactly. Keep it simple. Stop loss is the ADR, and that's for every single trade for each pair that you're trading on. Yep. Okay, one last thing I wanted to share. I have a really cool thing, and this may not apply to everybody, but yeah, so before I get into that, just if you're trading with a prop firm, awesome. Get back into trading with a prop firm account. If you trade with your own money, I learned a trick and I put together a trick, and I think we should do this in another webinar. But so a lot of you guys know that I trade a 6-figure trading account with Steve Scanner, and so I'm really excited to get that account moving again. So I used to, and I feel kind of stupid that I used to do this, but I used to just deposit the entire 6-figure account in Owanda or Forex.com. And if you guys know, those companies, they're not FDIC regulated. They're not SIPC insured. So if they go under, you have the potential to lose all that money. And so that's kind of a scary thing for me, even though they're technically regulated by the CFTC. It's just, there's no guarantee upon deposits or a bank or a institutional failure, right? And so one of the things that I figured out is when you're using this non-lot size calculator matrix, if you're ever depositing your own funds with a firm, you don't need to deposit the entire amount. Let's say you trade 100K of your own funds at a place like Owanda or Forex.com. What I would suggest is only deposit the necessary liquidity for the week that you're trading. So for example, if you're trading on a 100K account, let me just run the calc. And in fact, I'll find a way to make this easier for everybody. To trade 25,000 units, that's 25,000 units per, let's say 8 signals times 3, because you might have 2 stop orders that could trigger as well. You would need $600,000 in liquidity to take those trades. Now, remember, the average maintenance requirement for each trade is 1 to 30. So you would divide 600,000 by 30. And so you would only need $20,000 in your account to maintenance a trade of, to maintenance week 1. So you could treat the account like it's $100,000, because by week 5, you would need $100,000 in the account to be able to maintenance those trades, but you only need to deposit 20 grand. And so that's what I'm doing right now, is trying to limit my institutional risk by only keeping the necessary liquidity for the week that I'm trading. And then if I had to go to a week two, I'll anticipate that on a Thursday or Friday, and I'll deposit extra funds, from that account. Let's say you leave it in like a high interest savings account, so it's earning interest, but then only deposit the funds as you need those funds. So anyway, we'll do another webinar on this. I know it's probably too much to share. I'm just excited. So I think it's clever. And I think it's really smart because you have all of your other funds sitting on the sidelines, earning interest in the high interest savings, and then you only deposit them in the actual brokerage account as you anticipate the need for it in the coming weeks. And then obviously, if you have a winning week, you'll sweep your profits from that account, and then you'll just put your money back. Like if the default leverage is $20,000, you just make sure that you have $20,000, and then you just return funds back to the main account where you keep your funds until you actually need them again. So anyway, fun little risk management method for those of you that trade with your own money. And you can be doing that even with smaller accounts, not just 100 grand. Let's say you're trading with 5K. Well, you don't need to deposit all 5K in the account today. You would just deposit the minimum to take this week's trades. And then as you move up in the multiplier, you can then increase the leverage and liquidity as needed. So kind of cool. Okay. Any other questions before we wrap up? I don't see any more, but yeah, I'm really excited. So this Sunday, we're going to take weekly trades. I'll post those in Telegram. You guys can take them. You're going to need to set aside about an hour max. And let me know if you guys have other questions. But I'm excited. And then on Monday, we'll meet to discuss how the trades are getting started. And remember one last thing, every weekly trade is traded in a sequence. So if you have a losing week, don't ever let the losing week get you down, because we're going to get our money back in the coming weeks as we finish off the sequence. So, okay. Appreciate each one of you guys. Have a fantastic and stellar evening. Looking forward to seeing you guys tomorrow in the live trading class, and we'll recap our week. But thanks for coming, and we'll see you guys in the next webinar.